Hi, everyone. Welcome to Lone Star's Lending Leaders. Our guest this week is Jason Doshi, co-founder and CEO of Payments.io. Longtime industry vet, been in a lot of different aspects of the mortgage industry before he came to the tech side, where the grass is greener, I'm sure. So excited to talk about that. Jason, thanks for coming on. Excited to hear a little bit about your pathway into the industry. I know it's a family affair, and kind of go from there.
Yeah, no, for sure. Thanks for having me, Jim. And I love chatting about what we've built and where we are today in our journey. So thanks for giving me the platform. Happy to share more thoughts about it, and just excited to be on your show.
Okay. No, glad to have you. So even before payments, I know you were in the mortgage side of the business for a long time. Were you a 2-year-old like your daughter now and just say, I want to be a mortgage broker? Like, how did you get into the industry?
Yep. Yeah. So a lot of times people say my first word was mortgage. So, it's been a family business for quite some time.
Mm-hmm.
I got involved a little over a decade ago.
Mm-hmm.
And it was a small broker shop, based out of New Jersey.
Mm-hmm.
I got involved and just wanted to put a different spin on things. Wanted to really, grow the business with the focus on client service, because post financial crisis, a lot of home buyers didn't really understand the mortgages they were signing up for, and mortgage being a relatively commoditized business, I always thought of it as, what can we do to differentiate ourselves? And I decided to place that focus on client service. So, over the past decade, 11 years, I was able to grow my mortgage company into one of the largest independently owned mortgage brokers in the nation. And, it was an awesome journey. Learned a lot about the business. And what's interesting about, my journey is that, you mentioned it's a family affair, and it truly is, because my brother, who's also the co-founder of Payments.io, ran a title agency for about 2 decades. So having that brotherly bond and that relationship of referring clients back and forth, discussing growth strategies, has been awesome. And, together
we're sideways deals during family dinners.
Yep, exactly. Oh, our family hates it. Every gathering we have, it's like, can we please not talk about work today? But it's hard not to when you're obsessed at the level that we're at in a healthy.
Excited about it. I am in the same boat with my family, growing up in the title industry, so I can definitely understand that.
Yeah. We use our obsession and our passion to drive us forward, and we keep it healthy. I know sometimes I know burnout's a big issue. And we're mindful of that within our families, and we're mindful of it at our organization as well. But
well, excited to get into that, and especially what you're doing now. But first, I'm interested in that kind of client service piece, right? Because that's, in some cases, kind of lip service that you hear in the industry, right? Of the borrower experience, right? It's more about, let's give technology to people to make things run faster for us, right? So how do you, for lack of a better question, monetize that client service? Like how much does that really impact what's happening to your business going forward? What's the ROI of good client service at the end of the day?
Yeah. So on the mortgage side, when I was running that business, we were 100% referral based, and that is pretty unique in the industry, where lead buy is such a big part of origination. We were solely referral based, and it was referrals from previous clients, referrals from real estate agent partners, referrals from attorneys and CPAs. So to grow a business where we were doing $1 billion a year in loan volume strictly on referral is it's a pretty substantial feat. So, and we realized that when we focus on client service, and what does that mean, right? People talk about client service, but what does that actually mean? It's communication, right? Giving the client the information of exactly where they are in the process, what to expect next, right? Being organized, being responsive, letting them know, you've completed this step. Here's what to expect. Here's when you can close, setting expectations. That's the biggest thing that I think a lot of people fail to do. And it's not necessarily any one person or any one company's fault. A lot of it is just the nature of the business, where the real estate industry is so fragmented. You have real estate agents, mortgage companies, title agencies,
attorneys,
homeowners insurance, attorneys, appraisers. There's so many different entities and individuals involved in the process. And it's a very emotional process, right? So when you look at the intersection of the fact that it's an emotional process, the fact that it's a highly fragmented process, and the fact that it's a very high dollar amount, a big financial decision. It's just a recipe for miscommunication and a recipe for anxiety and things to go sideways. So our focus, we kind of took the role at the mortgage company that we were the project manager. We were sitting in the middle of the transaction. I know a lot of people within the transaction like to assume the role of the project manager because, they want to be able to have control and, there's a lot riding on each and every closing. But we really, took that role and owned that role and wanted to clearly communicate to our clients, where they were today, what to expect of the next steps, and, what we can do to get to a successful closing. And we really, take that client service piece to heart. And we've parlayed that into, what I've built today here at payments.io.
Yep. So tell me a little bit about that, of kind of what led to payments.io, what, led you. I don't know if you're fully out of the mortgage shop or not, but what kind of, led to that transition?
Yeah. So we were, when my brother and I were, this was a few years ago now, probably 2018, 2019, when we started looking at, what we could do to really double down on our client service and provide a better experience for our internal team. We really dissected and really dove into the process of, where are all the different touch points? Where are the handoffs from different organizations, right? When does a real estate agent hand off their part to a title company? When do they hand it off to a mortgage company within the organization? When does sales hand it off to ops? When does it come back to sales? What's the title agent, title underwriter relationship look like? We really dissected the entire transaction and decided to focus on one of the larger pain points that no one was really building for. And that was the movement of money. The title company was increasingly dealing with issues managing paper checks, right? Like the sending and receiving of paper checks, extremely inefficient. Checks can bounce. Checks sometimes have the wrong payee. They're not signed. There's so many issues, right? I mean, and let alone the fact of actually having a paper check is probably the biggest issue. I personally don't even have a checkbook, right? If someone tells me to write a check, I kind of just freeze. I don't know what to do. So that's one issue. And then the biggest issue, which is now starting to gain a lot more attention, but was kind of creeping up even years ago, was wire fraud. Real estate wire fraud is a huge issue in our industry today. I mean, it's daily. It's honestly daily. A stat from last year or early last year was 1 in 3 real estate transactions have attempted wire fraud. I'm sure that's gone up. The depth of wire fraud is increased. The volume of wire fraud is increased. The different ways that fraudsters and hackers are attacking
sophistication is wild. Yeah,
exactly. And as a first-time home buyer, you trust the process to some extent, right? You don't know. You get an email or you get a phone call, you get some sort of notification. You assume it's coming from a trusted source, and you hear about it, but a lot of times it's like, oh, that's not going to happen to me. I know what I'm doing, and people, it's from a hackers and fraudsters perspective, it's the best transaction to attack because people are fair. The frequency of the transaction is low, right? People are doing this once, twice, maybe 3 times in their life. So the frequency is low, so it's easy to attack. And it's a high dollar amount, right? It's 2, 3, 4, 500, sometimes millions of dollars, hundreds of thousands of dollars that can be stolen with just one gap in a process.
And to your point, you talked about the number of folks involved in the process. Bank of America has great security, but the attorney they're dealing with, the title agent they're dealing with, the appraiser they're dealing with, there's so many other attack points where something can come in. I remember seeing a story a couple of years ago. I think it was a New York attorney. Their email, they were just using kind of an AOL or personal email that got spoofed, and they lost $2 million of their client's money and their bar license. So it's
sad, and it's frustrating because, when you look at a title agency, the reason why they exist and why they got into the business is at its surface is to ensure title, right? You're ensuring that the person you're purchasing the property from or the real asset from has the right to sell you that property, and you're ensuring that. And now it's kind of morphed into this, title agencies are in the business of protecting their clients' money and, avoiding and defending wire fraud. So, when we really looked at those issues that we were facing, there was nothing from a technology perspective that we felt we could buy and then iterate on, or buy and just, integrate into our workflow. So we decided to build something.
And how does payments kind of address that problem?
Yeah, so pretty much payments.io has the goal of eliminating the use of paper checks and, eventually eliminating, or at least for now, reducing wire fraud. And the way payments.io is built is it allows homeowners, home buyers, interested parties in the real estate transaction to transfer funds directly from their checking account to a title agency's escrow account without having to share account numbers and routing numbers. So, we keep the process double blind. So the title agency doesn't know their client's account number, routing number, and vice versa. So when a client needs to send earnest money deposit for a new purchase transaction, they're out, on an evening or a weekend, or they're touring the home virtually, instead of having to, write a paper check, mail it in, or run to the bank, get a certified check, run to the bank, or get on the phone for a few hours and wait on hold to send a wire, and having your account number and routing number exposed out to the title agency or whoever you're sending that wire to, we allow home buyers and homeowners to conduct that transaction 100% digitally. So, very, very basic concept is like Venmo for real estate, right? You're not, you're not sharing your account number, routing number. It's mobile friendly. You can do it from a desktop. You log on to your account, and then the money goes directly into the title company's escrow account.
Well, more important, as a title company or mortgage shop, you can say you will never be asked to provide your account information.
Right.
No one will ever send you wiring information. If that's happening, call us, something's wrong.
Right. Exactly. Today, every single mortgage lender, title insurance agent on their email signature says, do not accept wiring instructions over email, call, fraud is a real issue.
Yeah.
But a lot of the solutions in place today to solve for that are manual. Some title agents, we don't accept wires, we only accept certified checks. You're almost asking the industry to go backwards in order to solve a problem.
Yeah. You can fax a check, right? Yeah.
Right. Right.
I had a client, a title agent, where I think they got an email about a change of wire instructions, had a number to call. They called the number, person sounded believable enough, wired it, 75 grand gone. Right. So even the calls aren't foolproof.
Yeah. It's so like you said, the phone calls aren't 100% secure, and the processes are manual, right? And if you think about the real estate boom that we've had over the past, probably almost year and a half now, a lot of title agencies weren't built to 2, 3, 4x their volume. And, when they look at policies and procedures that they had to combat wire fraud, for title agencies doing 100 transactions, their protocols were built for 100 transactions. Now, when they increase to 200, they're not able to increase their team.
Right.
What happens, right? Something's got to give somewhere. Yeah. And just for the sake of keeping up with volume, some title agencies, unfortunately, might take shortcuts to get loans funded and closings done. And you're putting yourself at risk. And,
to the topic you had before of burnout, right? The same person who can maybe do 10 transactions at a time now has double that. Mistakes are going to happen. It's unavoidable.
Yep. Yeah. It's not intentional. It's not anyone being lazy. It's not anyone not doing their job correctly. It's just the fact that when you have manual processes, things are going to slip through the cracks. And unfortunately, these are very costly mistakes.
Yeah.
And, one case of wire fraud or two cases of wire fraud can unfortunately put a title agency out of business. And it's
absolutely.
It's truly scary. And, just being at a lot of events last year, a lot of in-person conferences, I would just overhear people talk about, all the issues they're having with wire fraud. And that's what's top of mind, not only for small title agencies, but some of the largest in the country, have these issues of wire fraud. And, they're doing everything they can to safeguard against them. So that's, that was really, it's a very, purpose-driven mission that we have here at payments.io. And it's twofold, right? Eliminating paper checks and reducing and eventually eliminating wire fraud. And
I think there's the third too, which is, just taking people out of the process, right? And in a good way. And I think that's something I've seen growing up in the industry of just the ebbs and flows of hiring and firing. I feel like it's very prevalent, and we're probably starting a hiring aspect, right? Or a firing spree right now, right? You see lots of loan officers, lots of folks getting fired. And just because, to your point, mortgage volume can double overnight, then go back down. It's always been an industry with really sharp swings. So I think you help address that in a really good way, but I want to hear a little bit about, on the mortgage side, when you're an operator, how you deal with those ebbs and flows.
No, it's tough, leading an organization where, you don't want to quote unquote miss the boat, right? Because when you're in a low interest rate environment, everyone knows it's not going to last forever, right? You need to take advantage of it while you can. And it's tough to balance that, right? Over the past decade, we experienced a mini refi boom in 2012, 2011, that was a little bit of a refi boom. 2016 was Brexit, right? So that drove rates down. But then, that didn't last for too long. But then 2017, 2018, 2019 were really big purchase markets. Nothing like we've seen over the past year. But even when the pandemic first hit in March of 2020, you had, lenders taking a pause. No one knew what to do, right? I mean, literally no one had any idea what was happening.
In a state like New Jersey, loan officers weren't able to work remote.
Right. The regulation wasn't in place.
Allowed to do that. Yeah.
Oh, yeah. You had to, you weren't allowed to take an application from your home office. So the regulation wasn't in place for remote or virtual work. And a lot of, companies paused, and, I think we're still part of that recovery now, but it bounced back pretty quickly. And, I think from an organization's perspective, I think what you need to do is really just balance where volume will be, not necessarily 30, 60 days from now, but 120, 180, maybe 240 months out, right? What does a year or 2 years look like? That's what we need to plan for, because mortgages specifically aren't going away. It's never going away, right? People need to buy houses. They need loans to buy houses. The concept of a mortgage,
home equity has never been higher because of how high prices are right now. So folks who want to consolidate debt or, build up a home office or do all sorts of things, the value of your house is probably the easiest way to tap into that money.
Right, exactly. Whether it's through, a HELOC, a HE loan, a cash out refinance, there's, the market is still there. And, what I think will change about the mortgage industry is the delivery mechanism of data, right? When you look at, underwriters need to verify income, they need to verify assets, they need to verify, residency. There's things that, are involved in the verification process that will never go away. And a decade ago, someone was hand delivering their bank statements or their pay stub, and then they started faxing their pay stubs over. And then they started emailing their pay stubs over. And now there's, so many technology platforms out there that are data aggregators where you just need to log in with your username and password, or even providing your social, would gather, your estimated income, your average bank balance, whether you're a US citizen or not, right? All this information is out there. So underwriters need it. It's just how this data is being transferred from home borrower to underwriter, right? That's where things are changing and evolving. And, a lot of the talk around the industry is speed to close. And it's, it's a real thing because people want to know when they can close, how quickly they can close. And I think, just making tweaks throughout the process, if you can shave off a day here, a few hours here, that'll at least give the home buyer some more comfort, right? I don't think, anyone today, maybe in the future, I don't think anyone today wants to buy a $500,000 house with the click of a button, unless you're, an institutional investor. I don't think, your average home buyer who's buying their first home or second home wants to be able to close in a day. But what I do think they want to know is if they can eventually close, whether it's 30 days, 45 days, will they get qualified?
I think of it more like the Domino's pizza tracker, right? Of like having your mortgage tracker, of knowing throughout that 30-day process of where you're at, right? Are we waiting on an inspection, appraisal, preparing documents, in a waiting period before closing, whatever those things may be. You mentioned cutting time off closing. And one thing that I always kind of wonder is, say you're able to save 4 hours per loan in the time it takes for you to manufacture and process a loan, right? 100 loans a month, that's 400 hours that you've saved, right? Does that mean you're firing people? I think there's a misconception of when a company saves that chunk of time via investing in technology, what that actually looks like from the people perspective.
Yeah, no, that's a great question, because that's a very real fear, right? When we're out, selling and marketing payments.io, the leaders, the executive team that's looking at efficiency and looking at P&L, they love the platform because they realize how efficient it can make their team. But then when you get to, a little bit more of a junior level where you're looking at the escrow officer and you're looking at the ops team, they get nervous because, they're like, oh my God, I spent so much of my day writing checks and mailing checks and putting them in FedEx and calling clients to deposit their checks. And then when they don't deposit them, I call them again. And then the check becomes stale. So I send out a new check. And they're nervous, right? They're like, oh my God, is this going to replace my job? Yeah. And that's not 100% valid, because I think it just makes everyone more efficient. And, it allows, the definition of efficiency, doing more with less. And I don't think people are going to lose their job. I think they're able to do more. It'll allow title agencies to expand into new market. It'll allow them to grow their branches, right? Grow their team. And, similar to mortgages, if you have a loan processor that's doing, an average of 50 loans a month, if they can shave a few hours off their day, maybe they can do 60 loans a month. And I know a lot of loan processors get comped on their production, right? So everyone can make a little bit more money. They can make their lives a little bit easier. So, and what's really interesting about mortgages, which is unique to, I think the mortgage process and the real estate process, goes back to that theme that it is at the intersection of, being fragmented, being emotional, and being a big financial purchase, where it can never truly be 100% digital. I think we can use technology tools to make humans more efficient, but there's certain things that humans can do that technology can't do, and vice versa, right? Technology can never, humans can't do certain things, computing and processing that computers can do. And when a closing goes sideways and when a client just wants reassurance on certain things, they want to talk to a person that understands their needs. So I don't think it's it's going to take jobs away. I think it'll make companies more efficient, and I think it'll make those roles more efficient. And I think those roles will need to pivot a little bit in the value they add to their clients. For example, with payments.io, a lot of real estate agents spend time driving around their earnest money deposit checks.
Right.
They'll be at a property, and then they'll ask their client for a check. The client say, "Oh, I don't have one. I'll go to the bank tomorrow and get one." They'll say, "Okay, hey, to save you time, I'll come pick it up," because they want to get the deal in, obviously, right? They're doing their job. They'll go to their client's home or their client's work, pick up the check, then drive it to the title agency. I mean, is that really the best use of your time? If you're a real estate agent, you have a wealth of knowledge and you're adding a ton of value about the home, about negotiating, about getting the most value out of that home, school zones, different things. How far is the coffee shop? Where's the closest park? Like there's a lot of value you add as a real estate agent. Driving around an earnest money deposit check is not the best use of your time. So a technology like payments.io isn't taking away anyone's job. It's really just it's pivoting, right? You're focused on where you're adding more value to the process and not doing something that can be easily handled by technology and in a better way, right? That's really the way I see
the exact same thing with disclosures, right? Of why have a loan officer try to run down the fees to put on the disclosure when you can automate that process like we do with Lodestar. And now you have that loan officer actually talking to borrowers, right? Which is the same way a realtor has a wealth of knowledge. So will a loan officer about what is the right mortgage product for what they're trying to do. I much rather have that person say, what are your goals for this refinance instead of, calculating the costs in Hudson County.
Yep. No, exactly. I mean, it's, you look down, your LE screen on your LOS and you're trying to figure out, does this state have transfer taxes? Do I have to charge a mansion tax? New York has a mansion tax. Pennsylvania has transfer taxes that are paid by the, by the buyer. Like it's crazy that, if technology, you can build these algorithms into technology, why rely on a human? One, it's prone to error, and B, it's not efficient. And that was really when I was, again, more on the mortgage side. That's what I was looking at all day. It's how can we make our team more efficient? Do more with less, and focus on our core strength. And our core strength at the mortgage company was client service. It's let's focus, let's pick up the phone, let's send out emails, let's respond faster, let the computers do what they need to do. We add value by setting expectations, right? Even if it's there's technology solutions out there, like you mentioned, like the pizza tracker, right? I mean, a lot of LOSs and a lot of point of sale systems for mortgage platforms have pizza tracker type of updates. But what appraisal ordered? Okay, great. What does that mean? Do I need to go to the property and meet the real estate agent? It's nice to give updates, but then managing expectations behind those updates, is extremely important. And we still, today I still have a lot of conversations with mortgage brokers just from being in the industry for so long. And they're always we just love having these types of conversations. So we always talk about what can we do? What are some new technologies out there? And again, payments.io, it allows for commissions to be paid out. At our mortgage company, we had, two people that all day were just, collecting checks and depositing mortgage broker commissions that were coming in from different title agencies. So payments.io, through its disbursement engine, allows title agencies to pay out mortgage brokers, real estate agents, real estate attorneys, municipalities. So again, making title agencies more efficient by not having to send out checks, and making mortgage brokers, real estate agents more efficient by not having to collect checks. And now, those two people at the mortgage company that were just depositing and collecting checks all day, are now looking at how can we get this loan to closing faster? We're utilizing those roles in a more efficient way.
It sounds like, clearly as an operator, you were very focused on technology and efficiency. Now that you're trying to sell that to other folks in the industry, have you found it frustrating in some ways? Or are you feeling like not everyone is kind of seeing eye to eye? I remember for me, early on, I was calling folks about our solution, and the title agents said, our owner doesn't really like the internet. That's an answer that I got at one point. So I don't know where you've seen people. I'm sure you found some folks who are like-minded, but has it been more frustrating than you maybe originally thought?
Yeah, it's definitely a challenge. And part of the challenge is in the fact that the process is fragmented, right? No one owns the entire vertical. There's a lot of, again, incumbents in the space and new technology players that are coming out that would like to be more vertically integrated, right? Own all the way from, agent matching all the way through to closing. And, no one's really solved that yet. But when we do talk to title agencies, mortgage companies, real estate brokers, about our platform, they're intrigued, right? They're intrigued because we're solving for two very real problems, and we're meeting the consumer where they want to be met. And I look at this at payments.io, our platform, it's kind of following the same path as like e-sign, right? Like you look at, I can't imagine not e-signing certain documents. Where previously it's like, no, I want to sign it. I want to feel.
I get frustrated when I have to fax something too. I'm renting a condo this weekend, and I had to print out and scan a registration form, and I was so PO'd that I had to do it because I'm not always around a scanner. I'm like, just send this via DocuSign. This isn't that big of a deal.
Right.
But
exactly.
I think that's a perfect example though, because that's a technology that existed for a very long time before it was truly part of the mortgage process, and it's not even fully there now.
Yeah, but the parallel to like e-sign platforms is everyone then has to accept it, right? Because let's say you e-sign the application, so the borrower likes that experience, but then the lender may not accept it. The title agency may not accept it. Fannie and Freddie have to approve, right? So, kind of the challenge we're facing today, it's drawing parallels to e-signing platforms, RON platforms. With RON, I mean, the county recorder's office needs to get on board. The mortgage companies need to get on board. The title underwriters need to get on board. So in a fragmented industry where, it's not fragmented without reason. There's a lot of compliance and regulation in place for good reason, but it does require a lot of collaboration. And, we're all for that. We love, again, like I said at the beginning of this, I love talking about what we're doing because I'm extremely excited about how we're helping the industry, move away from paper checks, help reduce wire fraud, because these are two very real things. And as the younger home buyer, as younger homeowners kind of enter the picture, they're craving these experiences. They truly are, right? Like, when you look at, again, how things were done a decade ago, people were comfortable walking into a branch to sign a mortgage application. They were comfortable walking into a closing. Now you look at homes are toured virtually, offers are made virtually, contracts are signed using e-sign, mortgage applications are done online, appraisals are sometimes waived.
So are most other financial transactions that people make, right? I think you made a good point of meeting people where they are. That's how you do most other things anyway. So it's more about the mortgage and real estate process, at least adopting some of that while keeping that relationship and that hand-holding and those types of things. But we're a little bit just up on time here. The last question I like to ask everyone is, what gets you out of bed in the morning? What gets you excited to go in and sell a payment processing platform?
Yeah. No, that's a great question, because I think that's it's something that I think everyone should think about, right? Like, why do you get up in the morning? What helps you sleep at night? Like, and for me, spending a really long time in the mortgage business was a great experience for me because, again, although relatively commoditized, whether we existed or not, probably wouldn't have made a huge impact on the world. But, we were able to help homeowners and home buyers and families move into homes. And again, we weren't the only ones in the world doing it, but, having that feeling of, making at least a small impact on someone's life, always excited me. But what excites me today is we're actually making an impact on the entire industry, right? Not just on one person's transaction or one family's transaction. We're making an impact on the entire industry, on how payments and funds are moved in the real estate transaction. It's, we strongly believe paper checks are not a part of the future.
Yeah.
We know the heartache that wire fraud can cause individuals, right? That feeling, imagine that feeling of your attorney saying, hey, you're closing later today, where's your wire? And someone saying, oh, I just sent it like a few hours ago. Did you not get it? Like, imagine that sinking feeling in your body.
Your life savings in some cases.
Oh my God, what just happened? Right? Like that, we want to avoid that, right? We want to, implement some convenience in a very friction-filled process. And, it's not revolutionizing the entire process, but we're laser focused on the movement of money, and it does cause a lot of heartache. So if we can improve on that, and, a few years down the road, I'm sitting at a coffee shop and I see someone on their phone transferring their earnest money deposit, through payments.io, that would make me pretty happy.
Yeah.
And, knowing that someone doesn't have to run up and go to the bank and they're not worried about fraud and they can do things securely and conveniently with peace of mind. That's really what we're striving for. And that's why I wake up every day.
Oh, that's a wonderful mission, and keep on doing what you're doing in the industry. That's wonderful. It was great having you on, Jason.
Yeah. Awesome, Jim. Thanks a lot, man.